welcome to the Explainer. Every morning, before that opening bell even thinks about ringing, there's this whole story that's already unfolding. It's kind of like a global detective story. And today, we're going to follow the clues that tell analysts which way the market might lean long before a single trade is placed. You know, it's this really fascinating process of piecing together clues from all over the place, from what happened overnight in Asia to the fine print in company reports right here at home. It's all about building a picture, right? So let's jump right in with the very first piece of that puzzle. All right, so the investigation, it really kicks off before most of us have even had our coffee, with a look overseas. These are the very first signals, what the pros call global cues, and they're what set the initial tone for the entire trading day. And boom, right out of the gate, we've got a bit of a conflict. This morning, Asia is sending completely mixed messages. I mean, on one hand, Japan's Nikkei is on an absolute tear, hitting record highs. But then you look over at Hong Kong's Seng, and it's struggling. So what you have here is this classic push and pull dynamic that investors have to sort through. Okay, but the plot thickens, right? The US markets finish strong, which is definitely a positive sign. But then you see commodities like gold and silver are pulling back. And to top it all off, major markets in China and South Korea are closed for a holiday, so you've just got less to go on, making the overall global picture a little murky. So with that kind of mixed bag from overseas, analysts then turn their attention to the most direct clue for the Indian market, a really key early indicator. And that indicator? It's the GIFT Nifty. I want you to think of this as our main lead. It's like a sneak peek into how the Nifty 50 is probably going to open. Since it trades before our market even opens, its movement is a huge bellwether. So, what's the signal for today? Well, it's pointing to a small dip, just 16 points. Now, after a bunch of sharp moves up, this is basically the market telling us, hey, I might just chill out a bit today. It's not a huge drop, not a big jump, just a flat, kind of cautious start. Okay, so once we've got that big picture, the focus starts to narrow a lot. Analysts zoom in from that wide market view to the specific companies that are making headlines and are probably going to be active right from the get-go. First up, let's talk about the auto sector. The latest sales numbers are out, and they are painting a pretty positive picture of how people are spending. You've got big names like Maruti, TVS, and Hero MotoCorp all reporting really solid growth, which, is a fantastic sign for the broader economy. But it's not all good news, is it? You got a heavy hitter like Coal India reporting a drop in production. But that weakness gets contrasted by real strength in businesses that deal directly with us, the consumers. V-Retail's revenue is way up, and CSB Bank is seeing really healthy growth in deposits. It paints this picture of a really resilient consumer, even if some of the big industrial parts are slowing down a bit. And then, of course, you've got the buzz around new deals. Companies like Tata Power, Salmon Capital, and Ritz are all making news with new contracts, huge investments, and big orders. And news like this, it can have a direct impact on a stock's price the second that bell rings. All right, now we're diving into what's probably the most complex part of this whole thing, figuring out where the major institutional players, the big money, are actually placing their bets. This piece of the puzzle is absolutely crucial. And this table, man, it shows a real tug of war. On one side, you've got the foreign institutional investors, the FIIs, and they were selling. But then the domestic institutions, the DIIs, they stepped right in and bought even more. The end result is a net positive flow. It's like local confidence is winning out over that foreign caution. For now, anyway. But wait, you can't just stop at that headline number. You've got to dig deeper. When you do, you find something really interesting. While the FIIs were selling in the broader market, they were actually buying futures contracts tied to banking stocks. So what does that tell us? It shows this selective confidence, right? They're cautious overall, but still bullish on banks. And finally, analysts look at the options data to kind of see where the battle lines are drawn for the day. You see a ton of put options, which are basically bets that the market will stay above a certain level, all clustered around 24,750. That's your floor. Then you see a lot of call options, bets that the market will stay below a level, piling up at 25,000. That's your ceiling. And together, boom, you've basically mapped out the playground for the day. Okay, so we've gathered all these clues, right? We've got the global news, that key local indicator, what's up with specific companies, and where the big money is flowing. So now, let's see how an analyst takes all this and builds one coherent outlook. And this checklist, it really just sums up the whole process perfectly. It's like a funnel, You take this mountain of data that came in overnight and you boil it all down into one clear view before the market even opens. Today's whole setup is a perfect case study in what market tension looks like. You've got positive auto sales butting heads with weak coal data. You've got foreign investors selling while domestic ones are buying. It's this delicate balance of opposing forces. And it's such a great reminder that all this analysis, it's not really about finding a crystal ball. It's about understanding the character of the uncertainty we're all walking into as that opening bell rings.